Gang, welcome back, everybody. We are early, so we will wait just a minute before we get started. Wow. Welcome back. Again, we have a few minutes before we officially get started. So everybody make sure you have your water full. Make sure you got maybe a little bit of coffee. Make sure that you are energized and ready to go. All righty. How's everybody doing? It's been a while. I miss you. How you doing? Let me make sure everyone's mute all. LaCroix, that burp, baby. The wedding was amazing. Honestly, it was one of the best experiences of my life, just being there with my family, being like completely unplugged. Being completely unplugged, being like fully present. So that's how I actually wanted to start off this meeting, is with a big thank you to all of you, because I know that wedding kind of disrupted our flow a little bit, just because it's several days since we've had a meeting. Now, that being said, again, we had a decision to make, right? It was either start the mastermind then, or launch it this week, which means we wouldn't have even begun lesson 1 until next week. I have a feeling that you all at the end of the day would be happier getting all of this information earlier rather than push it 3 weeks, right? So that being said, again, I do really appreciate the patience with me this past weekend while I was pretty much absent the entire time. Again, you all know me. You know that that's not the way that things typically are. It's only if I'm gone on a trip, something like with my family, something like I'm seeing my grandparents for the first time in a while. It was really special. So I'm really grateful to all of you for understanding the little like few day hiatus, so to speak, that we took. Now, that being said, we have a lot to cover this week. So this week is going to be our core strategic week, right? Last week, what we did, and again, every single thing that I do in this mastermind is very specifically oriented, right? It's extremely specific. It's extremely calculated. There's a very specific reason that I'm teaching everything in that specific order, right? So we started with broker breakdowns and overall introductions to stages of a trader, some psychology. We then went into risk management and trading psychology, right? Then we started off the intro to our strategy, which is very important: trend analysis and candle analysis. Now, before we even get into the review examples that we are going to, which is normally what I wait for, again, this is not for Instagram, this is just for me. I'm just curious. Have you all been seeing the buy and sell setups start to play out? Have you started to see charts a little bit differently by identifying market structure, by identifying buy setups, sell setups? I don't expect you to have it perfect by any means, and I don't expect you to have a full understanding of the strategy, but are you starting to see things differently, right? For me, it was a massive change, because all of a sudden you like understand how charts are moving, right? Like you literally understand. Like, it's no longer like, what's it doing here? What are we doing with the EMA? What's the bounce? None of that. It's like, no, this is really the structure behind how a chart moves, right? Now, my favorite part about that lesson is that it's literally only the beginning. It's only, like we talked about, it's the first of a 3-part series, so to speak, right? I will admit that lesson 5 is always my favorite lesson. Even though I say I don't have a favorite lesson, lesson 5 is truly my favorite lesson. So I'm very excited for us to talk about tomorrow night when we do multi-time frame analysis, as I believe part 3 ties everything together in the most beautiful way possible. But I know that tonight is the most highly anticipated lesson that we have throughout any program that we do, because these levels are crazy accurate, right? That's honestly probably the reason that like 30% of you are in here, is because you saw how accurate the levels were, whether it be on Instagram or YouTube, and you're like, okay, I need the levels, right? This on its surface is absolutely our most like drawing thing to the program, I would say, is just the from a strategic perspective, because the levels are really scary accurate, right? They truly are. And tonight we're going to dive in and break down exactly how we find those levels, exactly how we remove them, everything in between. By the end of tonight's lesson, you are going to have a full understanding of how to plot your own levels, and in my opinion, the only level system that you should be using, right? Now, again, same as the last lesson, by the end of tonight's lesson, do I expect you to be 100% accurate every single time without any hiccups? No. Of course not, right? But by the end of tonight's lesson, even more so with levels than with trend analysis, I expect you to have the exact framework that you need. And there's going to be a lot of you, I don't want to put a percentage on it, but like probably 80% of you will be fully good on levels after tonight. It will click right away, right? I would say, not that you should feel bad if that's not you, right? But I would say that like this lesson, I really think that I've started to figure out how to explain, not started to figure out, but I've fully figured out how to explain it the perfect way, right? And really in the way that makes sure that we get, every time I teach the levels, we get less and less questions popping up afterwards about them, right? I know some of you just heard the LaCroix burps a minute ago. You're welcome. That being said, 5:05 Pacific, 8:05 Eastern, we are right around the number that I expect to be in live attendance for this evening. Let's dive in. Let's get started, right? So I always like to start off lesson 4 and 5 with a little bit of review because I need to sear this stuff into your brain. It's not good enough to hear it once. You need to start understanding it and have it literally seared into your brain. Give me 1 second to pause. It's really, really hot in here. Hey, Callum, you turn the AC on? God, so much easier. Everyone needs a Callum. I fucking love this guy, right? Okay, continuing on, right? So for some review. First, one of the primary things that we talked about in our last lesson is how we approach the market completely differently than how most traders do, right? Most traders approach the market in a basketball analogy, like a set play. They come down and they try and force something on the market, whatever it might be, a break over a level, an EMA cross, an RSI cross, a MACD, a supply reject, whatever. They come in and they force something upon the market rather than reacting to what the market is giving them, right? The way that we differentiate ourselves from the 99% of traders that fail is that we have a reactive system, right? A triangle offense, so to speak, where we react to what the defense is giving us, right? Now, another part about the triangle offense that I love in real life and in our analogy is that it has a defensive system built in, which is days that you put on a little bit less risk, days that you are not necessarily aiming for big ones, right? Which of course we'll talk about over the course of this program, right? So now that we know that we use a technical triangle offense, right, which is reactive, we create this reactive set of rules. We react to what the defense is doing, right? Now that we know that, we need to determine what exactly are those rules, right? So first, we as technical traders have this primary rule that markets are always either trending or ranging, right? There is no in between. The markets either have a trend, whether it be up or down, they have a trend, or they're in some sort of range or consolidative behavior, right? There literally is no in between. It is always one of those two, right? The second of our triangle offense rules is that the break of a previous candle, high or low, should, quote, should get continuation in either direction. The reason that's in quotes is because our third rule states that when what should happen does not, we take that information as a clue in our overall goal of deciphering the puzzle, so to speak. Right? Now, our next rule that we have is that candle analysis is applicable on all time frames. And we really highlighted this during our last lesson when we talked about buy and sell setups and how we talked about a buy setup on the 2-minute chart is just as valid as a buy setup on the weekly chart. They just offer different types of trades, right? Now, next, our final rule, and the one that we are going to explore the most this evening, is this idea that markets move from level to level. And really the thing that I want you to understand behind this is that markets have purpose, right? Charts have purpose. There's actual reason and rationale why the charts that we follow make the moves that they do, right? This isn't a randomized process of things are just making moves and then if it works, it works. Charts are just going somewhere nowhere. No, there's a level system that we use that actually we can start to define, okay, charts are, this is moving up, this is where it's going, right? Do we know for sure it's going to get there? No, but we know that's where it's trying to go, right? We know that markets have a purpose. They can always fail, but they have a purpose, right? So we talked about the fact that almost all of our trades are based off of trend analysis, right? Market structure is indeed the only indicator that you need, right? The market is a series of higher highs, higher lows, and lower highs, right? From there, right, we identified that we look to long higher lows and short lower highs. We like to trade with the trend. So combining that trend analysis with the idea that we short lower highs and long higher lows, right? Then combining that idea with this candle analysis that we talked about for buy and sell setups is how we determine our actual entry on that chart, right? So we talked about a lot in our last lesson that covers a huge chunk of our system, right? Trend analysis is big, candle analysis is very big. So it's very important that you have a clear understanding of what's going on in there. And based off the scanning of the questions channel, yes, even though most times people answer them before me, the truth is I do read most of the questions channel and I go back in time to check. And based on the questions channel, everyone's doing well in this class. We've got a few people who are asking very specific, nuanced, detailed questions about market structure, which is good. But I'm also not seeing a lot of like, I'm really confused type of things, which if you are, please make sure to either ask or put your support ticket in, right? Then we can work with you and try and make something happen if you're feeling truly behind or anything, right? But I haven't been seeing that a lot. So I'm taking that as a piece of information that I've done a good job explaining so far, and everybody has been able to sort of, it's clicking, right? Now it's just a matter of screen time, right? So with that, in our last lesson, we talked about 1.5 pillars of our 3 pillars that we have that are the core of our strategies, right? The first is candle analysis. Finding a buy or a sell setup is what we talked about in our last lesson. This also includes finding a failure pattern, which we are going to talk about in our next lesson. Then we talked about trend analysis in depth in our last lesson, right? Higher highs, higher lows, lower highs, right? And this also includes multi-time frame analysis, which will be talked about in our next lesson, right? Lesson 5, we are going to do a deep dive on multi-time frame analysis, noting that trends are different on different time frames, right? Next, we have the third and final pillar of our strategy. It's last, but it's definitely not least by any means. It is our level system, which are derived from the hourly chart, right? Right. And we're going to be doing a much deeper dive on that, obviously, tonight, right? Now, the last piece of review here that I want to go over with you all is just buy and sell setups, just because I have one more follow-up question for you that I've asked. That's similar to one that I've asked the other day, right? So we have buy setups, right? Buy setups are often how we use a method of entry in order to find a trigger into a trade, or a longer time frame overall thesis for a trade can come from like a weekly chart or a daily chart buy or sell setup, right? So these are most applicable during with trend plays. During an uptrend, wait for a pullback to establish support and a bar to take out the previous bar's high. Bear with me for 1 second. I want to put the better, I have a better version of this exact slide. I want to put the better version. I thought I literally did this earlier, but I guess it didn't save. Boom, right? So with the buy setup, what we have here, right, is again, during an uptrend, I hope this is review for everybody, right? During an uptrend, we wait for a pullback, and then we wait for a bar to break above the previous bar's high. Within our buy setup, there are 2 key components in terms from a candle perspective: our signal bar and our entry bar, right? Now, throughout the course of our program, we are going to identify different types of like signal bars and entry bars that you'll see, right? That you'll see frequently. But I imagine you're also just seeing a bunch of different types by watching the charts over the last week, right? As you watch the charts, you start to identify more and more and more and be like, okay, I'm seeing what these signal bars start to look like. I'm seeing what these entry bars start to look like. Reason being is that there is no like requirements, right? Like, is it nice if a signal bar is a green hammer? Yeah. For a buy setup, yeah, that's nice. Is that required? No. Right? It's not. The definition of a buy setup is a bar that takes out the previous bar's high. So in theory, any bar can be a signal bar. But one of the things that I think imagine you're going to get improve with more and more over the next few weeks with screen time is just identifying what different common signal bars will start to look like as you start to see them pop up frequently within your trading. Right? So signal bars, buy setups are the method of entry that we use for calls or for long positions, right? For shorts, what we look for is what we call sell setups, right? Sell setups are most applicable during downtrending plays, right? Again, similar to buy setups, they're most applicable during a trend, not a range, right? So during a downtrend, you wait for a rally to establish resistance and a bar to take out the previous bar's low, right? So the signal bar to us is the bar that's forming, signaling that there is a trade forming. This provides both our entry and our stop loss. And the entry bar is the bar that we use to actually enter that trade. So here we have a downtrend, rally, and right here is the first time that we break beneath a previous candle's low. That sell setup triggers us into a short trade, right, that we can keep, that we can continue to ride to the downside of the stop above this high. So now my question to you all, and one of the main reasons that we do this review is earlier on, I asked you, well, one, we do this review because I need to sear this stuff into your brains, right? But two, I asked you earlier on if you had been seeing the charts in a better way, seeing these frequently, seeing charts differently, whatever the case may be, right? And the answer was overwhelmingly yes, right? Now, I'd also like to ask you the flip side of that question, which is how many of you have seen a buy or sell setup trigger and then fail miserably, right? Whether or not you've taken that trade is up to you, right? And whether you're trading before the end of the mastermind or not, right? But everybody, right? Miserably. These are the way markets move, right? We talked about that in our last lesson, right? This is how markets move. In order for a market to shift from an uptrend to a downtrend, which they do on a frequent basis in smaller time frames, right? They're going to need to have failed buy or sell setups, right? Like those are the things that cause the change. So it's not, these are meant to fail a certain amount of times, right? These aren't meant to be taken on their own as a method of trading by itself, right? Because without any other information, like you all have just told me, these fail miserably sometimes, right? So this is why this is only part one of our many parts of the puzzle, right? A buy or sell setup system by itself, if you're truly patient enough to wait for a clean trend to be established, then a buy or sell setup system by itself is decent, right? But it is nowhere near the power of what we do with multiple time frames and then with levels as well, right? So again, there's a reason we cover this. The reason I ask you, right, is because everyone says that, yes, it's changed my trading, but yes, we've also seen that these fail a lot, right? So in order for these to be useful to us, we have to have a clear definition of the other parts of our strategy, right? These in a vacuum are susceptible to failures on a frequent basis, and we don't want failures on a frequent basis, right? We're not cool with that. In order for us to have that edge, like we talked about in lesson 2, right? The casino-like statistical high probability edge, we can't do that with just buy or sell setups alone, right? So the two other pieces that we have are time frame analysis and level analysis. Pause. Fresh LaCroix. So a little preview into time frame analysis. We are going to do a crazy deep dive tomorrow night and do a very thorough breakdown, right, of exactly what time frame analysis is. However, I want to give you a little bit of an introduction to it tonight, right? For us, the longer time frames are always going to be our focuses, right, for overarching trends and identifying potential larger moves. The smaller time frames are for entries, exits, and management, right? However, that's what's most commonly taught about time frame analysis, right? They teach like a top-down method. Tomorrow night, what we are going to do a deep dive on is how those smaller time frames actually impact the larger time frames, right? So top-down analysis is kind of a lie. It's kind of bullshit, right? It's good in theory, but it's kind of bullshit. And tomorrow night, we are going to do a deep dive on that, right? However, tonight's priority is for us to cover the most accurate level system in the world. And I'd like to take you back to one of the slides that we covered in our last lesson to round it out and add in our third support and resistance rule or concept, so to speak, right? So we had two rules that I introduced to you during our last lesson. The first being the knock-knock rule, right? The more times a level is tested, the more likely it breaks and breaks with power, right? Next, we have the Uno reverse rule, right? Which is that once a resistance is broken, that previous resistance should act as support upon being retested, and vice versa. And support is broken, that previous support should act as resistance upon being retested, right? Now, the third rule that we did not cover in our last lesson, because I did not want it to be confusing with buy or sell setups, is strictly in reference to forming levels. This does not have to do with buy and sell setups. Do not relate this last rule to buy and sell setups. This only has to do with forming levels, right? In our formation of levels, we like to make sure that we hit the body, right? we were trying to just find a rule for this one for like the first 3 masterminds, and somebody referenced to me that in boxing, right, one of the things that trainers will teach you in their training sessions is to focus on hitting the body, consistently take out the body, hit the body as much as you can. For us, the way that that triggers and remembers something in our brain is that when we are mapping out our support and resistance levels on our hourly charts, we are focused on the bodies of candles rather than the wicks, right? Wicks are a good visual representation of a level test, right? But they are not how we mark our levels out. For us, we use the bodies of candles to determine where price was accepted, right? Really what we look for is the open of the candle that changes trend. Now, everybody, we're going to steer this shit into your brain by the time we're done with tonight's lesson. However, one time, just say it with me real quick. Say it with me out loud. The open of the candle that changes trend, right? One more time. The open of the candle that changes trend. Just a little preview. We're going to steer that into your brain by the end of tonight. But that is where what we use to mark out our support and resistance levels, right? So there's a million different settings and ways out there that you can draw levels. I'm sure many of you have tried the same shit that I tried for countless years on end. I tried supply and demand. I tried the 3 touch rules. I tried pre-market highs, pre-market lows. I tried previous days high, previous days lows. I tried previous days close, like the closing price and the previous days open. I tried market profile, which is like this weird footprint chart where it automatically gives you like a value area. I tried that for a while. I tried supply and demand. Bullshit, right? I tried all of these things and none of them work on a consistent basis, on an actual frequent basis. In my opinion, on why they don't work, right, is because none of them have firm rules or definitive structure, right, that makes sense from a market structure perspective, right? That's the big key, is these things need to make sense from a market structure perspective, right, which we'll talk about a little bit more later on, right? So again, this is just one way to draw levels. However, in my opinion, I'm not going to sugarcoat it. This is the right way, right? So if I was you, what I would do is completely abandon everything else you have ever learned about marking up support and resistance levels. Sorry, but I would eat the L, count it as an L. This is what I did exactly when I first learned about this system originally from Eric Marcus, Major League Trading, who I believe it was created by his mentor, Robert Shapiro, right? The most accurate level system in the world. Throw everything else out. Woo! Doesn't mean shit. Supply and demand zones, everything you've learned about them, I'm to be quite honest with you, I don't care. I think if you want to continue to use both, that's totally fine. However, I think what you would be doing there is more trying to like get your money's worth on whatever course or get your time's worth on whatever YouTube video you watched previously that taught you that. I just disregard it. This is the level system that you should focus on, and you should put all of your energy into using it, right? Because in my opinion, this is the way that markets move, right? They move from level to level because it allows for structural integrity on these chart moves, right? So that being said, in order for us to make sure that we are on the same page, there are a few specific settings that I'm going to need you to set your charts to. We're going to talk about those in just a second, right? And there's also some terminology that we are going to need to cover to make sure that we are all on the same page for everything that we talk about tonight, right? So the first term is bar. I hope by now that everybody is clear, but bar and candle are potato, potato. They mean the same thing. A bar is a candle, potato, potato, right? Second is this term acceptance, right? So acceptance has a few different meanings to us. First, the use of the word acceptance comes from the fact that we look where price was accepted, aka which is the bodies, not the wicks, right? But we also use the term acceptance referencing general price confirmation, right? So if we said we were looking for acceptance over 150, I'm not just looking for a quick break over 150. I'm looking for a break over 150 that holds, right? That is in an uptrend and holds pullbacks, right? It doesn't have to pull back exactly to the level, but it develops a trend above the level. I'm looking for candle closes above the level, some sort of general price acceptance, right? Where it's not just a quick break above, right? That's not the way that levels work. And we'll talk about that more in just a second, right? But acceptance doesn't have a specific definition, right? Acceptance is more general price confirmation. And that will start to become more clear once we dive into the charts and with screen time for you all, right? Next is confirmation, which does have a textbook definition. The way that we use the term confirmation is in reference to hourly candle closes. So if I were to say the words to you, I'm looking for confirmation over 162.50, that means I'm looking for an hourly candle to close above 162.50, right? An hourly candle closing above or below a certain level acts as confirmation to us. And we'll talk about why in just a minute, right? Next is wicks. How do we use them, right? Wicks, again, we'll talk about this in once we dive into the charts, but wicks for us are a visual representation of a test, right? And we'll talk about what that means, because I know it might sound like mumbo jumbo in just a second, right? But the main thing I want you to walk away with, and again, that you won't have any confusion by the end of this, is that when we are drawing our levels, we use the open of the candle that changes trend, not the wicks, right? Pivot is a term that you will often hear us use, and pivot is really kind of like acceptance, where it doesn't have like a formal textbook definition. Pivot is where something is going one direction, it stops and starts going the other direction, right? So we will give it a formal definition on the hourly chart, right? But if you reference like the market structure that we've talked about before, right here, where something was going up and then starts going down would be an area where it pivoted, right? The chart pivoted, it changed directions, right? That's how we use the term pivot. You'll hear that in a variety of different ways, right? Next is level, right? Levels are the reference points that we are watching, right? They are the reactions points that they are watching. Levels are not God. Despite what you may have heard, despite how accurate I might describe them, despite how much everybody is in love with them, the reality is they are not God. They are not. There's a reason that you can't just be like, okay, there's a level at 162. As soon as we break over 162, I'm buying calls, right? That doesn't work for people long term, right? The reason being is that levels aren't the end all be all, right? Because we know that things fail, right? Yeah, when we break over a resistance level, should we go higher? Yeah, we should. Does that mean we always do? Nope. We know that when what should happen doesn't, we take that information as a clue, right? So levels to us are simply reference points where we are looking for reactions, right? We are looking for a reaction at that reference point where we can start to gauge using the other rules that we have in our triangle offense system. I swear to God, it's like the most beautiful, pardon this language, but it's the most beautiful orgy of all time when you see levels, multi-time frame analysis, and trend analysis all come together, but you have to let them work together. You have to be okay with polyamory and these things working together, right? If you're not, then I don't know what to tell you, right? Now, the last word that we have is reactions, right? Again, these are not universal. Reactions are something that we're going to do a deep dive on right now so that we have a clear understanding of why reactions are going to be different on certain names, not necessarily certain names, but just certain different opportunities, different situations. Things will react differently to certain levels, right? Now, right. Sorry, I had someone pop on their camera real quick. I just turned it off. No, I have nothing against you all being on camera. At the end, we are definitely going to do, at the end of our program, we'll do something where you all pop on. But right now, it just slows down the bandwidth. So if it does pop on, I turn you off. Don't be offended. It's just for the bandwidth. The last slide here before we dive into the charts, right? The level system that we use is going to be derived. Actually, no, I'm going to pause. I always mess this up. This slide is the one I do right before we dive into TOS. But before we dive into TOS, I need to take you and talk a little bit more about the reactions that we just talked about, right? This definition that I just gave, right? So let's go ahead and scroll over here on this random chart, and we're going to put a line here. There's this horizontal line. There we go. Right, so let's imagine that this is our level in play, right? This green line here is our level in play, right? So the first thing that I'm going to show is, let's say we have something that's in an uptrend, it starts to pull back, and boom, it doesn't even test the level, and it just starts off, it just goes bing, bang, boom. It front runs the level, the term front run meaning that we stopped a couple cents or a couple, whatever it might be, short of that level, right? But from a description perspective, in terms of how would I describe this particular reaction, I would use the word strong, right? This is a strong reaction, right? We come down, we don't even test the level, and we have a super strong reaction, right, to that area, right? Almost so strong because we didn't even touch it, right? Now, if I were to describe my next situation, do something like this, where it tests the level and then rockets, I would also call that strong. That to me, where it ticks the level, where it comes to it, one and the same, they are strong reaction. I do prefer if the level actually trades, right? Because I like the level, we go from one level to the next, right? Now, let's say we have something like this, right? Where we come down, we dip under the level, and then we rocket back up. I would also continue to call that a strong reaction, right? Like we talked about, the levels aren't end all be all. You know what I mean? So like the fact that we dipped slightly under and then got right back above and rocketed up does not mean that the level is any less powerful, right? These levels are extremely accurate, but that doesn't mean that you expect them to hold to the cent every time, right? And then a little break above or below can still be a strong reaction. It's very important to make sure that we're all on the same page about that. A little break above or below can still be a strong reaction, right? Okay, that didn't work. Okay, I'm gonna redraw this. Trading view, sometimes I get lost on you, right? So we have the first run where we came down, didn't even touch, reacted. We have the second example where we came down, we touched and reacted with the strong ones. Then we came into our third example right underneath, still defined to us as a strong reaction, right? Now, let's say that we have a chart that comes down, pulls back. Again, we're assuming that all of these are in uptrends, so we're expecting them to hold the level, right? So we come back. Let's say we tip the level, come back, set a little bit higher low, and then boom, get that strong push up. Would you all call this a strong reaction still? Good, some mixed answers. My answer would be yeah, right? As long as this actually like makes a move and continues pushing, right? Which I guess I should have drawn it to like extend a little bit higher up to show you that we got the continued move. I'm cool with that, right? What we did is we bounced at the level, we set a little bit of a higher low, and then we continued rocking. I'm cool with that. I would still call that a strong reaction, especially if we still get the follow through, right? Again, the reason we go over this is a reaction to a level are going to vary, right? If it was as simple as buy this level on a retest, just buy the level and wait, right? Then everybody would be rich. It's not the way it works. You have to start understanding and seeing how we are reacting to these certain levels, right? So let's say something comes down, test the level, bounces, test the levels, bounces, test the level, a little bit high, low, but continues to go here. Would we call this a strong reaction to the level? No, right? Why? Because that looks a whole lot like what we just talked about as a bear flag. We talked about that being a move down in a period of consolidation. Now, are there times where this is going to result in that? Yeah, absolutely. If you take a look at a chart of the SPY today, it probably looks like this, but there's no level there. Right? There's no level there. So that's why for me, there was no long trade on the end of the day on SPY. But there are going to be times where we do have a kind of a slow reaction to the level, right? Where we really do that. But for us, I'm still not defining that as like strong. Does that mean it's not tradable? No, but it differentiates what we're looking at in the way that we're trading it, right? Would I call this a weak reaction to the level? Initially, probably, right? Initially, I would probably say that it's medium-ish weak. I don't really know how to gauge it because the level's holding, but the level's also not really reacting, right? So it's kind of like a neutral type of vibe where it feels like, I don't know that it's necessarily the most tradable, right? Which if you think about it, makes perfect freaking sense. If we were back at the blackjack table, like we talked about in lesson 2, where you're only looking to take 20 or 21s, then you probably only want to be taking strong reactions to levels because it's clear. You are able to have a clear definition of what you think is going to happen. On this one, I'm not really sure because the level is holding, but we're not really making any forward progress, not really reacting. So it's more of a neutral vibe, right? I'm not necessarily sure that that's a reaction that I'm super interested in trading off of, right? Now, let's say that something comes down here, test the level, bounce, test the level, bounce, breaks underneath and starts going a little bit sideways like that. That to me is a weak reaction to the level, right? We got a couple bounces on it, it held, then we pushed through it. Now we are still kind of holding a little bit, right? But at this point, this is a weak reaction to the level. And this to me is something where you'd be looking for like a change in trend, right? If this was an uptrend, right? Meaning if this was up here, was an uptrend, then you'd be looking for a change in trend for a short. Or if it was a downtrend, you'd be looking for a continuation type of short, right? But this is sort of what I would define as a weak reaction to a level, right? So now let's kind of take a look at something similar where we put another line here. And I want to make sure that we're clear on what exactly my definitions of when a level is a reference point. Because by the end of our next lesson, you are going to have 4 things. And I pride myself on this. This is, I hate the way that educators teach a bunch of generic trading stuff, but then you're supposed to like pick and choose when to use which things. The end of our next lesson, by the end of it, you are going to have 4 things. It's almost like a checklist. I need X, I need X, I need X, I need X, right? One of those X's, the first one is a level or the opening print, but primarily a level as a reference point, meaning that you need some sort of reference point level on that trade in order to tell you what you think the market is going to do, right? That being said, I want to make sure that our definition is clear on what exactly can be used as a reference point, right? So let's say that we have this green level right here, right? And we're starting out the day beneath it, right? So we're starting out the day beneath it, but we think if we get above there, based on all the things we're going to learn tonight, tomorrow night, and what you learned in our last lesson, we think if we get above that level, right, this will continue to go higher, right? So one way that you will commonly see this play out, right, is we'll have a little bit of a first push up, and maybe it breaks above, and then it pulls back, but doesn't give that retest. It just forms a buy setup right there, right? Actually, I want that gone. It forms a buy setup and a potential higher low, right? Even though you are not buying the retest, would you say that this level is still a reference point in this overall trade? Yes, right? Yes. We were looking for a break above. We got the break above. We got the pullback. Then we got the buy setup, right? Now, there's still another piece of this puzzle that's going to come tomorrow night, right? So please don't think you have the full system yet. You don't. There's a really important piece that's going to come tomorrow night, right? But this is starting to check some of the boxes that we've covered just over the last few nights, right? Break above, pull back, buy setup, right? Boom. All of a sudden, yeah, I would say that that level is still being used as a reference point, right? Now, let's say that you have a move up, hits resistance, starts to pull back, starts to consolidate. And right here, you get a buy setup, right? Maybe at this point, it's on the 15-minute chart where the buy setup triggers. Again, that will come a little bit more tomorrow night, right? But you get a buy setup, right? That forms on 15-minute or hourly chart, right? If you told me your reference point was this level right here, and you entered the trade a little bit beneath that level, right? Anticipating a retest of that level, I'm going to say, yeah, That's a good reference point. That's a good example of using a level as a reference point. I'm cool with that, right? Because we don't necessarily expect the level to break on the first test, right? If it does, great, but we don't necessarily expect that. Why? Because we know it's a level there. We expect a reaction there. We don't necessarily predict what that reaction is going to be, right? I would still be okay with you using that level as a reference point, right? If we get something like this, where it's a break above, then comes back underneath and offers a buy setup right there, I'm also cool with that, right? So again, these levels aren't the end all be all. What they do is give us directional guide. It's like a directional guide, right? It offers us this directional guide. It's half of the directional guide. Trend analysis is the other half. But this allows us to have these reference points, right? Where we're saying that, hey, right, we broke above, we came back and tested slightly under, and we're getting a potential higher low, right? All right, I'm going to take an entry there as we get back above the level. Here, we never got a break above, but I'm going to buy a pullback anticipating a test of that level. Here, we got above, and I'm going to buy before we retest it because the trend is strong, right? All of these are okay, and they're all counting as using the level as a reference point. The main thing that I want you to take away from this is that from each of these different scenarios, the level was the key component. It was a reference point, right? It was one of the pieces that you had to check off, right, in order to make sure that you had some sort of gauge of where this chart is going, right? So I know everybody is super eager to dive into the charts. It's like, Jake, show me how to mark these things already. But that's the problem with most educators, right? And I hate to harp on people like that, but it really is. Even if they have a fire thing to show you, they show you, and it's not like they're trying to hide anything, but it's just not great education, in my opinion. They show you how to do it, but they don't talk about how it's different. Like reactions are going to be different, right? How we use these levels is going to be different. They are not end all be all. It's not simply a reject of that level does X. You have to watch to how things react, and you have to watch and identify how are you going to use that level as your reference point based on the reaction that you are seeing, right? All right. I know I just said a whole lot of words without actually showing you all how to mark up these levels. So what we're going to do now is take our water and pee break. We're going to be back in about 3 minutes or so, 3 to 4 minutes. And then we're going to dive into Thinkorswim, and we're going to break down exactly how to mark up these levels from a day-by-day perspective. And then we're going to mark them up on Snow, and I'm going to take you through a little bit of how they could have been utilized in Snow today, right? Let's break. We'll be back soon. I love you all. I think this lesson is going great so far. or a long enough break in between. But let's dive into the meat of this lesson. I am extremely excited. Damn, I totally forgot. I was going to do something in between lessons. I was going to record a video on my Instagram and be like, hey guys, don't tell my mastermind class, but I'm making this video during our water break. Ha, and then hang up. Would have been really funny. Might happen again. Stay tuned. But that being said, let's get back on track and let's talk about the levels system and finally break down on the charts exactly how you are going to mark these magical levels up. So for us, we get all of our levels, 98% of them come from the hourly chart. The power of the hourly, it is an extremely powerful tool, right? It is my favorite time frame, I would say. Above all else, it really is. I would have to call it my favorite time frame, right? But within the hourly chart, we're going to change a few specific details in order to make sure that your settings are exactly the same as mine in order to mark these up. So give me 1 second. I'm going to share screen here. And then I'm also going to flip to one thing real quick. All right. So first things first that we have to do, my friends, first things first is we have to adjust a few settings that we look at, right? So we just mentioned that we get all of our levels from the hourly chart. So first things first, let's just flip this to the hourly, right? What you'll see is that you'll see there's dark gray areas and light gray areas. What this is showing you is the extended hours trading session as well as the actual market hours, right? The regular market hours, right? This is inconvenient for us for two reasons. One, we don't want to mark levels on the chart that is including extended hours because there's not a whole lot of volume that takes place during that. Even on names like Apple, Nvidia, all that, the pre-market volume is like inconsequential to what's occurring during the actual trading day, right? So we don't want to have extended hours on our charts, right? So the first thing that we're going to do when you're on Thinkorswim is go up to this settings wheel up here. You're going to go to equities, right? And you are going to de-click show extended trading hours, right? And this is going to leave you with an hourly chart that does not have extended trading hours on it, right? Now, before I take you a little bit too deep on that, let me mark out the other reason why we don't, the other reason why we do one thing that we do, right? Now, I took you to the settings wheel. We went to equities and we de-clicked show extended trading hours. The other thing you want to make sure is checked. And if you're someone using TradingView, Ron G is on tonight. He's a TradingView expert. He'll be able to answer any questions, but this one is built into you. All you have to do is remove extended hours, I believe, right? But the other box you want to make sure is checked is start aggregation at market open, right? Now, the reason we do that is because you'll notice, actually, let me change that. All right, let's do equities. Let's deselect that box for a second, right? There are how many hours in a trading day, right? 6.5. We start at 9:30 a.m. Eastern. We close at 4 p.m. Eastern, right? So 6.5 hours in one trading day. Does anybody notice what there would be a problem with that when it comes to an hourly chart? There's 6.5 hours, right? But so what do we do with that half hour, right? Do we count that as a full candle? Do we put it at the beginning of the day? Do we put it at the end of the day? What do we do about it, right? If you leave extended hours on your chart, what it will do automatically is the first hourly candle of the day is going to include the 30 minutes from pre-market. So it's going to be 9 a.m. to 10 a.m. Eastern, which is not what we want, right? The first hour is very high volume. We want 9:30 to 10:30, right? So it's key on these settings. First step is go to equities, make sure that show extended trading hours is not selected, and make sure that start aggregation at market open is selected, right? So I'm going to screenshot this. I'm going to go to text lessons in the Discord, and I'm going to paste that note. Right? It's going to process for a second, and then it'll actually go ahead and post. right? Now, there's two other steps that I want you to do while we're on this settings page. First is I want you to go over to futures right there. On futures, you're going to go over and you're going to make sure that the same thing is checked. You do not want extended hours trading showing. For me personally, there's going to be Ranji. Sometimes I'm just teaching you the way I do it. There's a little bit some people who have evolved this on their own, and it's rocked out and done great for them. But for the way that I'm teaching it right now, I do not show extended trading hours on futures either, right? Now, the other thing that you want to make sure that is checked on futures is you want to make sure that adjust for contract changes is selected, right? And again, you want that start market aggregation at market open to be selected. All right, so I'm going to copy this. I'm going to paste this into text lessons. If you could just throw a check on there just so that you're following along with me and you have these settings going, right? Next up thing, the last thing that I want you to do on your settings is back at general. I want you to go to this thing that says snap drawings to. Right here, I want to make sure that you have open, high, low, close selected, OHLC. Right, you're going to want to make sure that that is selected as well. That is going to be a huge headache saver for you, and I'll show why. Right, so with that, this is what your chart should look like. Right, you should be left with an hourly chart that is a full first hour from 9:30 to 10:30, and the last candle of the day is only 30 minutes of data or information. Right? So this is how your chart should look. These are the settings that we use on our charts. That is the first priority in terms of marking up these levels, right? So now that we have our charts laid out the way that we want them to, let's start to identify a little bit what exactly it takes for us to mark out a level, right? So the first thing that we do, the first thing that we look for when we are defining an hourly level is we look for trend changing moments on the hourly chart. All right, so I'm pasted that in text lessons. I'm also going to paste that here on the chart. We look for trend changing moments on the hourly chart. The simplest way to think about this is from when candles go from red to green or green to red color changes. Now, it is a little bit more complex than that. Not every color change is dramatically important to us, but that's the simplest way to think about it. We look for trend changing moments on the hourly chart, right? So let's bring this mark up here and let's scroll. Actually, let's scroll over a little bit. Let's drag this right here, right? So just for an example, for you to all gauge the meaning of what I'm looking for, this right here would be a trend-changing moment on the hourly chart. We are moving up right here on this particular candle. We are moving up, we stop, pivot, and start going the other direction, right? And going from a green hourly bar to a red hourly bar. So right there, we've identified a trend-changing moment on the hourly chart, right? Where we're going from up to down. We pivot there. The simple way to think about this is we go from green to red, right? Now, that's the first thing that we look for. Now that we've identified this oval area, right, which is where we identified that there is a trend change on the hourly chart by noting the green to red color change, the next thing we need to do is figure out where exactly we are going to mark that level, right? So the next step here for us to determine where a level would be, we look for what? The open of the candle that changes trend. Everybody say it with me. I'm going to make this as clear as day. Ready? The open of the candle that changes trend. One more time. The open of the candle that changes trend. One more time. The open of the candle that changes trend. The open of the candle that changes trend. So we move here, right? We have a move up. Then we have that candle that changes trend. So where do we mark our level? The open of that candle, right? So in this particular example, right, in this red to green color change that is very zoomed in and you are seeing right here, we would want to mark the open of the candle that changes trend. So what I would literally used to do until I discovered that open high low hack that I already showed you is I would zoom in this much and click with the level tool exactly where that level would be, 42.24, right? Why? Because this red bar is the candle that changes trend. The open or the body of that candle is where we want to mark, right? So right here, we've identified based on our rules for finding levels, we've identified that we look for trend changing moments on the hourly chart. Basically, we look for red to green or green to red color changes, and we mark the open of the candle that changes trend. Right? So now if we were to go through and do this for the rest of this chart, right? If we were to go through and do this for the rest of this chart starting here, okay, let's go through it. All right? We have a move down, then we have a red bar that goes green. So in theory, you'd mark there. Then we have a green bar that goes red. In theory, you'd mark there. Then you have a green, green, red, red to green, mark, red to green, mark. Now, what's the problem that you, oh, red to green also right here. What's one problem that you can identify with what I have just showed you? Too many levels, way too many levels, way too many lines. How many times, though, have you all had a chart that looks like this? And you may have done it with a different system, but where you literally have levels and lines every freaking 3 inches, right? It's a problem, right? So in order for us to figure out, right, what we are going to do and how to get rid of that problem, we need a system in place in order to remove those levels, right? So third, when to remove. When we get a confirmation close through a level. So earlier tonight, I mentioned the term confirmation to you all. Who can give me the definition of what confirmations are to us? What is confirmation? Hourly candle closes. Hourly candle closes above or below, right? So when do we remove our levels? When we get an hourly candle close through them. So let me remove everything that we just drew. I know this is a really, crowded part of the screen right here. That's intentional. I promise you we're going to go through this with it. It's a little bit less crowded as well, right? But let's go through and mark out the levels just the way that we did. First, we have this level up here, 42.24s, right? Then we move down this day, right? And right here, we form a level, right? We have a red bar that then goes green. That forms a level for us. But the very next bar closes through it. So that invalidates the level, meaning we would remove that and it would no longer be a level on our charts. And truth be told, we never would have marked it because we wait until the end of the days to mark our levels, right? So if we're closing this day right here, what we will notice is that we have a green. We tried to go back to red, right? So we do actually have a level at 42.06. And at the end of that day, that level is still valid. Again, I want you to kind of ignore what happens the next day for now. If we're looking solely at day one here, right? And we have to always pick a starting point. So we're going to just pick this as our starting point. We're going to pretend like everything left of this red line never happened, right? So on day one, what we have happen, level forms at 42.24. Level forms at 42.06, right? And that's our day, right? Again, in a vacuum, ignoring what happens the next day. And it's hard for me to get it zoomed to that exact point. Let's see if this works. Yeah, it still doesn't do it, right? Based on what we know on that day, based on our rule system, we have a level that forms at 42.24. We never get a close through it, so that level stays on. We have a level that forms at 42.06. At the end of the day, we never have a close through it. Here we have a wick that pops up there. What do wicks do for us, everybody? I don't expect an exact definition that you might remember, but somebody might remember it. What are wicks for us? A visual representation of a test, right? So right here, we wick up, but we test the level, but we do not close through that level, meaning that at the end of the day, that level is still valid and it's still open and it's still a part of us, right? I guess technically we have one right there too. This is a choppy ass day. Normally you would not have this many levels that are of importance, but here we really do go red to green as well, right? So a level also forms at 41.97. Now, while we have a definitive rule system in place for the levels that we have, I will say not all levels are created equal in terms of what you can expect from their reactions, but we're going to talk about that a lot more as we go, right? So day one is in the books, right? Day one is in the books. We went through, we started at this red line, we went everywhere to the right, and we marked out the level at 42.24. We marked out the level here at 42.06, and we marked out the one at 41.97, right? So we go through, and now we continue on into our next day, right? We continue on in our next day. The first thing that we see is the market opens up relatively flat, goes down and tests the level, 41.97, holds, right? We get that wick, that visual test of a level, and then it rallies up and it gets a close through 42.06. So now we have day two, 42.06. $42.06 gets closed through, right? See right there. I hope that's very clear to everybody. The candle closes through the level, thus we remove it, right? Now we continue on with this day, right? And again, I'm going to skip forward to the end. That way we aren't marking levels that get removed intraday, because again, we would wait till the end of the day to mark our levels. And what we can find is that the market actually creates two new levels. Right here, at 42.15, we create a level, right? We go from green, we have an hourly somewhat buy setup, right? That ultimately ends up failing. We pivot there, we change direction. So we mark the open of the candle that changes trend. So day two, we had 42.06 get closed through. We had 42.15 form, right? We also had a sneaky level right here, 42.07, but that gets a close through at the end of the day, so it is not a level, right? So on day one, and I know that I'm going through this a little bit slowly. There's some of you out there going to be like, Jake, I get it. Pick up the pace a little bit. But I'm doing this because what I've learned after teaching this 9 times is that doing this day by day thing eliminates like 80% of the questions that we get. It's worth it, right? So bear with me. I promise I'm doing this for a reason, right? So day one, we had the level form at 42.24. Still never gotten to close through that, meaning it is still valid. Day one, we also got a level at 42.06 at that oval. That level got invalidated the next day. It's gone. We also had a level form at 41.97. That level remained in play, although it did get tested, right? So the next day opens up, we have day 3. First thing we can note is that we have a failed test of 41.97. That ends up offering a short opportunity. Right, but day 3, we kind of have a similar structure to what we had today, right? In day 3, we had a gap down underneath a level, right? So looking for rallies into that level that then offer sell setups. I encourage you all, go look at the pre-market plan today. Retest of 41.99, then a sell setup underneath the opening print. Of course, I was looking at it more on a smaller time frame, but today we see exactly that just on the hourly time frame, right? A gap under 41.97, a retest of that level, then a sell setup. This one happens to be an hourly that takes place as we are breaking back beneath the opening print. This broke us down and ended up leading into a solid 30-point short, $3 on the SPY, right? And it ended up breaking it through a couple of levels that we had, right? Two. Where am I? Got myself a little bit lost. All right. So let me remove that. All right. So from here, we have 41.97. Then right here, what you will also note in this oval, right, is we have another color change based on the rules that we follow. In theory, we'd mark up another level there. However, this level is 41.95.75. This level is 41.97. Do we need 2 levels, 1.25 points away, which on the SPY would be 12.5 cents? Do we need them that close together? No. So is there a level at 41.95.75? Yes. Would I mark that level? Probably not. Because I think 41.97 is right there. It's already shown that it's giving us reactions, right? No harm, no foul. We're just going to keep that one, right? So day 2, we have a failed test of 41.97. We then sell off for the rest of the day, right? And we do get an end of day level here at 41.64, right? Where we try to go green and then we go red, right? So on day 2, I'm also going to mark up. I'm going to mark up the oval as to why that formed there. All right, so now we've gone through 3 days, starting at this red line over, and we've marked up levels that we would be paying attention to, right? Now, the next day, we have a red candle to end the day and a red candle to open the next day. So there's a gap down there. Jake, how would we handle the gap down? Now, we'll talk about the situations in which this is not true, but in most situations, color change rules still apply on gaps. So if we gap down from this last candle of the day that was red, and the next one opens up a red bar, again, you have to ignore everything before that red line, right? We started at the red line, right? I would not mark up a level here personally, right? I would not mark up a level here personally, even though I guess you could, in theory. This could be one of those situations where the gap down and we never close back above the open, so it's still a red bar on the daily. We'll talk about that more in lesson 8. But in our situations, for all intensive purposes right now, I would not mark this red bar as a level at the moment, right? We continue on trading down. We ended up getting a level right there, but it gets closed through. right here, you can see we do have a support level formed at 4115.75. We also have shortly after another one at 4118.75. Jake, do you mark both? No, they're close enough. I'm probably going to use the one that's a little bit lower just to be safe, right? From there, we continue to rally up, right? And at the end of the day, we get a little bit of a color change there, 4135.50s, right? So a level would be marked there. So day 3 or day 4, what happens? Level at 4115.75, level at 4135.50. So the next day we have a gap up, and this is actually an interesting gap. It's what we refer to as a gap over red, which we're going to do an in-depth breakdown on lesson 8. But we get a gap above this 4135 level. It tries to test the level, does not able to get there, front runs it a little bit, starts to rally up, and we do have a level formed right there, right? Now, these levels are still 10 points apart, right? These levels are 10 points apart, but I want to start to introduce you to a principle that is going to come into play a little bit later on, right? These levels are 10 points apart, but for our purposes of this explanation right now, let's just pretend that these levels were like 4 points apart. So everybody just use your imagination with me. Actually, I'm going to correct that bar. Oh no, that ruined it. How do I go back? Ah. There we go. Okay, right? But for all intents and purposes, just bear with me, everybody. Let's just envision that this red candle right here closed at 4140, right? So there's only a very small difference between these two levels, right? Now, can anyone identify to me another difference? While they are both color changes, they're both trend changes, there's one specific trait between this level right here, which is forming at 4140. We're going to pretend this closed a little bit higher. In this level right here at 4144.75. Can anyone identify what is one characteristic difference between these two candles? I don't necessarily expect that. An answer. Opening print, wicks. Would it be the gap up? Okay, so not the answers I was looking for, and that's 100% fine. I did not expect anybody to get that. But this level right here, 4144.75, was it formed intraday, or was it formed at the end of the day, meaning including that last candle, which is only 30 minutes, not an hour? 4144, intraday or end of day? One answer. Okay, yep, exactly. This level right here is formed intraday. It forms between 7:30 and 8:30, right? That's not at the end of the day, right? This level, the 4140, where we're pretending this closed a little bit higher, right? That one was an end of day level, right? End of day levels can still be valid, especially if there's nothing in the area, then they are definitely valid. But if you have two close levels and you are deciding which one is quote unquote more important, AKA, should I be more worried about 4144 or should I be more worried about 4140? Right? The answer is intraday levels are greater than end of day levels when comparable, right? Meaning when you are looking and they're close enough that you make a decision between the two, right? The intraday levels, the one that form intraday, are always going to be and take precedence over ones that form at end of day. Why? Because the intraday ones are full 1 hour action. End of day levels are ones that only are 30 minutes, right? So again, if there's nothing else in the area, yes, end of day levels are totally usable. They're totally fine, all good. But if you have to choose, intraday levels will typically be more important, right? They're the ones that are structurally more important to the chart. And we're going to break through examples of that as we continue on. Right? So let me make this one a little bit smaller and drag that up here. Right? But continuing on, we have day 5. Right? And on day 5, for now, because of what we just talked about, I'm going to remove that 4144 one. I'm more interested in 4144.75. I'm not too worried about this end of day one at the moment. Right? So day 5, what happens is we have a level form at 4144, then we rally up. In end of day, we get a red bar that kind of sells off and changes trend. Right? So we push through this 4164, but we form another end of day level. So day 5, let's go through. What did we accomplish? We formed level at 4144.75, erased 4164, formed level at 66.75. All right, so I'm going to remove 4164 and continue to mark out ovals on where each of these levels originally came from. Right, so the next day we have a gap up, right, but it doesn't open fully above the level here, but it gets a push through. So this is an example of, Jake, you just said intraday levels are more important. Where would be a situation where an end of day level would still be important? Right here. The next day we open up, there's no intraday levels in the area. So without any other reference point, that end of day one, which is still valid, is going to take primary focus for us, right? So now what happens on this next day, day 5, right? Day 5, we eliminate 41, or let's just mark it first, talk what through happens. Day 5, we get this strong green bar up, and it closes through 41.97, giving us that confirmation close, right? A confirmation close above 41.97, right? And that gives us the clue that the market is going to continue higher, right? From there, that level ends up getting removed, and we get a new one that forms right there at 41.99. We then get another level that forms right there at 42.10, and we erase 42.15. So this is the part of this presentation where I stop marking up every single thing that we do that day, because I hope that it's a little bit clear enough now on what's going on each day. Right? So having taken you through these days, right, this day right here, right, the next day, this one is actually a holiday day. That was it Memorial Day? Yeah, that was Memorial Day right here. Right? Anytime there's a holiday like that, I disregard everything. I don't care what happened on this. I wish they would just be removed from the chart, because that does not count as a candle closed through to me. I do not count that as a new level formed, right? That, to me, that action does not matter. So we have to just pretend that what happened in this oval here, those 4 hours, just don't exist, right? So the next day we open up here, and here we see that, again, you kind of have to just skip these middle days, but we end this day, right, with a green bar. The next day we open up and we get a red bar, right? So there's a gap there. Do we mark a level right here at the open of this candle? Do we mark a level there? Do we mark a level there? Good. I'm seeing yes, no, yes, no, yes, no, yes, no. Good. Right? Color changes still apply on gaps, right? So again, we are ignoring this candle. It's hard. I wish we could remove them. But these 4 bars in the middle of nowhere right there are from Memorial Day. So we're ending this day on this green bar right there, right? We're opening the next day with that red bar. That's a color change. That's a trend change. So yes, we would mark that. In most situations, color change rules apply to gaps, right? So we have a gap there, it gaps up, but the color change happens. And so we mark a level at 42.33. From there, we sell off. We close through 42.44. That gets removed. We continue to sell off. We close through 42.10. Right? So that gets removed. However, we do form a new level here at 4206.75. Right? All while maintaining this 41.99 level. Right? That leads us to today, my friends, where we get a gap down underneath the 41.99 level. We get a retest of that level, an intraday sell setup that leads us down. Now, we don't get all the way, this level, excuse me, would have been removed by now, right? And that leaves us with our next level all the way down at 41.44.75, right? Now, today we did form a couple of new levels. The first one we formed is right here. Next one we formed is right there. We also had one, so I'm going to mark it out. So we have all the ones that formed right there. Right at the end of the day, we mark up another level right there, right? However, there are 15 cents away on the SPY, 1.5 points on the S&P. I'm not going to keep that level there. I'm going to remove it, right? So that gets removed, right? So that then gets removed, right? Again, it's still valid. I'm just removing it for simplicity purposes, right? With that, my friends, these are the current levels that we have in play for the S&P 500. All right, so let me edit a few drawings here. Right? But these are the levels that we currently have on the S&P, and these are the levels in play. Now, what you'll notice about our levels comparatively to most traders out there is that there's significantly more room in between them than other traders have. Most traders have levels every 5 or 10 points, right? We are looking to capture these larger moves, right? Because if now we know that if we get a break, I said earlier on this morning, I thought that going from 41.99 all the way down to 41.44 in a day seemed like a lot, right? So that wasn't something that I was necessarily looking for to happen. But now today we formed a new level at 41.74.5, right? I am now open-minded to shorts beneath this level. I think would probably go get and tag this level. It would probably be a level-to-level move, 30 points, $3 on the SPY. If you can find a sell setup that offers you a 50-cent risk, all of a sudden you're risking 50 cents to make $3, right? So these levels, right, are really going to be the key. And these are the ones that I would have marked up at the moment on the S&P. Jake, another popular question that I'm sure has been asked already. Jake, how far back should you go to mark levels? As far back as you need. Levels are not invalid until they've gotten a close through. So you'll see times where we'll have levels all the way back from 2021, but they've just never gotten a close through and they're still valid as hell, right? Then another popular question is, Jake, on a daily basis, how far back do you go to mark your levels? Not that far back. I'm only really interested in the ones that actually play a role today. So for me, for the S&Ps, what I did was when I was marking my charts out pre-market, I had 41.99. I had this one 42.06.75. I had this one down here 41.44s. And that's all I had. Because in my eyes, I didn't think, I did have 42.43 marks, but I didn't think we'd get there today, right? But in my eyes, coming into the day, because we didn't have this 41.74 yet, in my eyes, I didn't really care to mark out any further levels because it didn't seem important, right? Like we're not gonna, it's highly unlikely that we go and trade that far away today. So why stress myself out about that? So what I personally do is at the end of every day, I'll go through and I just clear the drawing set, right? Not every day, but like every couple of days, I'll clear the drawing set. Then the next day I mark up the levels that are in play for me, right? That's what it is, because the next day we could gap all the way down here, and then I just mark out the new levels that were in play for that particular day, right? So you don't need to be going back in time like 8 years to be marking out levels and have them all marked in advance. I think that's a waste of time. Focus on the names that you're going to trade in the immediate future. Trade those names, like mark out the levels on those names and let it be, right? And then use them as reaction points, right? So let's take a look at an example. First, what I want to do is get back to that main drawing set. Again, I've seen a few questions pop up, and when I have checked on the chat box, that are like going cross lessons, trying to do this and that and combine everything. Reminder, everything that I teach you is in a very specific order, right? This is not meant for you to be crossing everything together and trying to piece it all together and getting everything, getting it and knowing it all right now. So there's a few of you specifically that I'm talking to. I think you know who you are. The goal of this lesson is to teach you all the levels the exact right way. So I love the eagerness, but there's a reason I teach this the way I do. I don't want you to be trying to extrapolating what I'm teaching you right now into different strategic things. Right now, I want you to focus on, do you know exactly how to draw the levels? That's the point of this lesson, right? So for the few of you that are trying to go ahead and tie different concepts together, I understand, I applaud you, but I've been doing this for a while. I know exactly how to teach it in the order to teach it in. Let me do my job. I promise you, I'm doing my job in a very, very good manner. Let me do it. And I'm going to do it in the exact right way, right? So the thing that I want to do now, before we move on to snow, is I want to decrease the size of these a little bit, right? And I'm going to get a screenshot going in text lessons that has this exact picture. That way we're all clear on what you can look back on this chart and be like, okay, I get it. This happened this day, right? Like, okay, I get it. This happened this day, right? And you can have a clear understanding of what happened on each and every day. So let me just edit this one and make it a little bit smaller. Now I know why I had these at 12 for the last one. It was for the picture. And that's right there. All right, so I'm going to now screenshot this and get this posted in the text lessons of the Discord. All right, so give me a check there if you've followed along and if you think at the moment you have a pretty good idea. Again, I don't expect you to have it locked down, but I would love like 30 or 40. There's 89 of you on right now. I'd love at least 30 or 40 checks. Just do it for me on this one, that you have a clear understanding of where these levels come from. Again, don't expect you to be picture perfect on it yet, but a good understanding of what we're looking for, the rules that we're following. And if you don't have a clear understanding, make a support ticket at the end of this lesson and we'll try and make sure that any confusions get covered. But I think most of you should have a clear understanding of where they come from, where to remove, all of that. Text lessons in the Discord, I would love if we could get that up to like 40 or 50 responses, right? Okay. Nothing going. Okay. Right now, the last thing that I want to do on this evening is take you into snow and take you through exactly what I did today, right? So snow was a focus name for me for all the reasons we've talked about, and especially if you've watched the YouTube video that I posted, right? There's a ton of in-depth reasons. We'll talk about those even more tomorrow night, right? But let's talk about the structure and process that I looked at for snow when marking my levels, right? So I came into the day with an empty chart, right? And I had noticed that snow had a level right here at a pullback area, 157.66, it looks like. And then it also had a level at 158.94, right? From there, I also had to scroll a little bit back here. We had a level that had never gotten closed through at 168.89. We had a level right here that had never gotten closed through at 169.38. We also had a level again, another one was right here and another one was up here. But these two seemed a little bit like Hail Marys to me on one day, right? So I didn't have those marked personally right now. If it started to look like those were going to come into play, it would have taken me about 8 seconds to mark them up, right? But for me, coming into the day, these are the levels that I was focused on, right? I was focused on these four, right? These two that come from one that comes from right here, one that comes from right here, right? Then the targets that I had along the way were these intraday levels. There was also one technically right there, 164.23. I didn't have that marked today, but that would have been a valid one to have marked. I just think that these other ones were more trend changing, so they were more focused for me, right? But I will keep that one on there, right? So now coming into the day, knowing that these are our levels, right? Again, I'm not trying to walk you through the entire strategy that we have right now, right? Because again, we have a full another lesson to do tomorrow night breaking down this, right? But coming into the day, based off what we know on what I've taught you already, right? Actually, wait, there's one more that I had. Where did that go? I had a 161 level in here. Yeah, right here. There we go. There it is. Intraday 161. I marked it wrong. Does we not have open high? Oh, that's why these levels are looking different. Open high, low close wasn't selected. Let me reset that. So let's just mark these up again really quickly so that they're exact. That's why they looked a little different. Okay. And then there was this one right here. There's that one right there. Right. And these were the levels that I had for the day on snow. Right. So knowing, again, there's a lot more to our strategy that comes in the next lesson, but knowing what you already know, right? Where did my last levels go in snow? I also had, what the heck? I also had one here. Well, there we go. 166.94. Right? Knowing what you already know, right, about the markets want. Let me just pause and take you back there. Knowing what you already know, right? Knowing that markets are always either trending or ranging, right? Knowing that markets move from level to level and have a purpose, right? Literally with those few things alone, we can then start to extrapolate, right? And like, this is what I said I didn't want you to do, but now I'm just doing this for educational purposes, right? Right? But you can start to see this stuff real time and in action, right? So snow breaks above 157.66, opens, retests, holds the level, gets above the next level, right? From there, we know that we should go from one level to the next, right? So on a 5-minute chart, it's not super clear. But on a 2-minute chart, you can see it pretty clearly, right? We get strong reactions and breaks through these levels early on in the morning, right? However, they don't necessarily offer any actionable trade opportunities, right? Because we don't get any buy setups from them. Now, when you're more advanced, you've had the system for a little bit longer, you can do stuff like I've done, and where I take this first 2-minute little 1, 2, 3 type of pattern, right, off the lower level hold. But there's a reason I didn't signal that. 1, it was fast. 2, it was aggressive, right? But based on the things that you've already learned, right, a move up here, we then get a break above a level, right? Now we get a pullback to that level, and what happens after pulling back to that level? We form a buy setup, right? So again, there's a reason, my friends, there's a reason that I take you through every single thing that I do in a very specific, organized manner. This is back to the Roku chart, or not Roku, the Roku chart, but the drawing examples that we looked at earlier on today for reactions. I want you to take a look at this one right here in this very poorly drawn circle. This very poorly drawn yellow circle, right? A break above a level, pulls back, still gets underneath, right? So it doesn't hold the level on pullbacks necessarily, right? But still gets that strong push up. That's still a strong reaction to a level, right? Here on snow today, right, we get a pullback and a break under the level, right? And then a buy setup that offers us a trade opportunity up into 166.94. From here, it's literally a textbook level to level move, right? From 161.51s to 166.94s. I took you through exactly where those levels came from. 161.51 came from right here. 166.94 came from right there, right? Now we revert to a 2-minute chart. We have a break above a level, but a break above isn't enough. In this example, it would have worked if you just bought calls breaking above the level. But who the hell is to say that we wouldn't have just failed and started trending down after failing to go higher? We know that failures fail. Things fail sometimes, right? So instead of just buying the break over the level, what do? We wait for the reaction. We wait for the reaction. This is holding pretty well. It's holding pretty well, right? Then from the next piece of our puzzle, right, we then look for a buy setup to trigger us into that trade, right, so that we can have an entry point and a stop loss, right? We break over previous candles high, right? That triggers a potential higher low. We're trading with the trend off a level. We get a move from one level to the next level. Bing, bang, boom, right? We haven't even scratched the surface of multi-time frame analysis yet, which is, in my opinion, the favorite lesson. But I hope that you can all see from literally this alone, this should change the way that you think about trading, right? Because no longer is it, okay, there's a supply zone here. I'm looking for maybe a reject of the supply zone or weak price action or sellers on the tape or something like that. No, mother trucker, we're looking for level to level moves. We have 4 things on our checklist. Tonight, you've covered one of them, which is that we need a level as a reference point, right? In our previous lesson, we covered another one. We want to be trading with the trend. We covered another one. We want buy setups. We're going to break these all 4 down tomorrow night. But before you enter a trade, there's a scientific process to it. Does that mean every trade is going to look exactly the same? It's going to be robotic? No. But there is a rhyme to reason of what we do here. Markets move from level to level. Later on in the day, snow starts to pull back. Where does snow stop? Oh my God, shocking alert. And this is where I'm kicking myself for re-entering early. But where does snow stop? Oh my God, at the level. I'm so shocked. Can you see my shocked face? I'm freaking out. The level reacted and held. I'm freaking out. I'm so shocked. Which brings up one other common question that I want to make sure to address right now. Jake, we retested that level. You just gave me the shocked face about the level. But wouldn't that level technically have been removed because we closed through it? Aha, very astute, mis amigos. Very astute. I do not update my levels until the end of the day. Why? Because you will probably see a reaction to them if they trade again that day, even if they've been closed through. So do we mark intraday levels? Usually no. Do we remove levels after they've been closed through? Usually not until the end of the day. So would I have removed it at the end of the day now? Yes, I would. But I wouldn't have removed it intraday, and that would have given me some insight into where snow should have bounced. AKA, I probably should have waited till here to take my last entry for the not so shocking reason that the markets move from level to level. Right? So with that being said, my friends, we have officially wrapped up part 2 of our 3-part deep dive into technical analysis. I hope that you all had an incredible time tonight learning lessons. I know that it moves at a slower pace for the levels at some point, just because I really go out of my way to make sure that I go by like day by day by day by day by day, right? So that we're not friggin' missing anything, right? But I really think that this is going to be limiting overall questions that we're going to have on follow-ups. Now, with this lesson, what we have in addition to the quiz that you will have on Kajabi, right? You will also have some homework that will come in the text lessons channel. So let me actually, before anybody starts to leave or before anybody starts to do this, let's break down something that's really clear and so that we're all on the same page about this, right? We will always check the levels that you have. If you post us a chart in the questions channel and you say, hey, how do these levels look? We will always answer how they look. However, there's a right way and a wrong way to ask. So let's say you do this. You mark up snow here. Ron, if you're on, your second one wasn't spoiled, so I deleted it. Let's say you mark up a level here, whatever. I don't care if they're accurate or not. Let's just say that you just mark up a series of levels, right? And then what you do is you send us this picture that I'm going to post in text lessons right now. So Ron, actually hold off on the spoilers from after this right here. I'm going to post one more thing. This is the wrong way to ask for a level check, right? Put yourselves in our shoes. As myself or a moderator, you will now have to, in order for us to check those levels, we have to click your picture. We have to zoom in on every single thing in order to see if it's right or wrong. That is time inefficient for us. The right way to ask if your levels are being checked the right way is to, 1, mark them out. So, okay, I got a level here. I got a level here. I got a level here. I got a level here, right? And if you zoom in and send us this picture, we're way more likely to be able to identify them. What would really make it helpful for us, and takes about 5 seconds for you all, is to click the oval button and just oval where you think the level is coming from, right? If you do that for us, if you mark your levels out this way, and then send us a picture where it's clear where we think you're marking from based on the oval and the picture is clear, then it's super easy for us to not only tell you quickly, are you right or wrong? We can answer in 2 seconds rather than 10 minutes, right? But then we can also be like, hey, no, you're wrong because of this. So not only is it easier on us, but you also get a way better answer from us, right? Right? So if you're going to ask us about levels, which is 1000% okay, of course we want to make sure that your levels are the same for us. Of course we want to make sure all of that. But let's make it a little bit easier on each other, right? So that we can give you better answers and so that we can do it in a more time efficient way. I hope that didn't sound too aggressive, and I hope that makes sense for all, right? So that's the first homework note. The second homework note is that we just went through an hour and 45-minute lesson. For all of those who are on tonight helping to answer stuff, right? Ron G, Callan, J-Bab, of course, the addict to answering questions. I know that it's East Coast time for them. Let's not make them check our levels tonight. Instead, what we're going to do in that text lessons channel, and Ron, go ahead and throw up an example one in there for me right now. What we're going to do is in that text lessons channel, we're going to post a chart and it's going to be titled spoiler. We're going to tell you, hey, this is the Goldman Sachs chart, GS, right? Or SPY that Ron just posted. Hey, this is the SPY chart. You can't view that. Let me go ahead and share Discord. And Callan, you can also use the ones that I put earlier in team chat, right? If you didn't want to mark more up. But you have SPY right here, right? You are going to then go to your charts and mark up what you have on SPY, and then you're going to click spoiler so that you can see what the actual correct levels on SPY were. That way tonight, you can literally have 10 to 12 or whatever. I prepared 6 myself. So we should put out at least 10 total, I would guess. You can prepare yourself and have 10 charts. So it's been a long lesson. It's been a long night. Let's give our moderators a chance. It's so nice now that I can say moderators, including J-Babs, right? Let's now give our moderators a chance, a breather from questions for the evening. So everyone can, it's 10 p.m. Eastern, right? Let's get some rest, right? Use these spoilers for tonight, right? Then starting tomorrow, anytime you have questions about your levels, just ask the right way and we will more than happily answer them always, right? And make sure that you have the exact same levels that we are trying to mark up, right? It's a really fluid system. Same way with me teaching this 9 times by now, right? We also have this system for checking people's homework and checking assignments, essentially all done as well, right? So with that being said, my friends, that wraps up our lesson 4. I am extremely excited. No need for the LFGs tonight. Honestly, it's getting so mainstream that I'm going to think of something even better that we can do because everybody's doing LFGs now. And it kind of feels like, you know, even though we're 10 times faster than them, 1, I don't want to embarrass them. 2, I kind of want to bring something new and special to the table. So let's think about what we can do on that, right? Because truly, this was one of the best times that I think I've ever taught the level system. Maybe I might end up even giving access to this levels lesson to everybody else, all of our other former My Mastermind students, which leads me into my final announcement of the evening, which, you know what, fuck it. We may need to do the LFGs after this just one more time. But our final announcement of the evening, right? There's a reason why you all don't get access to every former mastermind and why every former mastermind doesn't get access to yours, right? And the real reason for that is because they're all pretty much the same. I've been doing this with the same 8 lessons. Do I get better as I present them over time? For sure, right? But all of the material, generally speaking, is the same. So you don't necessarily need previous lessons, right? I don't necessarily think that is something that everybody needs. It allows us to offer an incentive for those who do video reviews, right? But what I will say, right, is that 1, anytime that I ever add any new material to a lesson that the previous classes didn't have, of course, every class gets access to that. So last mastermind, our lesson 2, we talked about dynamic R more in depth, much like we did in our lesson than we had in previous ones. So previous classes got access to that, right? This levels lesson, I think we covered really well. We may give everyone access to that just as a refresher, but there's one lesson, lesson 5, that is always different. It's the same concepts, but every time we do the lesson, I use a different main core example of a chart. So in Mastermind 4, it was Snowflake, surprisingly, which was an amazing example. Then we had Mastermind 5, or that was Mastermind 5 was Snowflake, I think. Mastermind 4 was ES, where there was an amazing example of 2 minute and 5 minutes working together, right? Then in the Mastermind 6, we had another fire example lesson, right? So what I decided to do early on in this program is every class will always get access to every Mastermind's lesson 5. Why? Because the example is always different, right? The example is always different, and there's always new things to learn about multi-time frame analysis. Multi-time frame analysis is the most difficult and intricate subject of what we do. And I think that you could have a variety of different stuff on it. So that's why I give you like 12 hours of content on different examples within multi-time frame analysis. So at the end of tomorrow night's lesson, AKA 24 hours from now, not only are we going to wrap up our lesson 5, and that means that you have everything from a strategic perspective besides building a watch list and pre-market routine that you need to know our technical system. You'll have literally everything at the end of the next lesson, right? Not only do you have that all, but you're also going to get 7 video drops from former mastermind classes lessons 5, right? In addition to those 7 mastermind lesson 5s, you are going to get another 5 videos, all between 1 to 2 hours long, of various different bonus lessons from previous mastermind classes. I believe 3 of those bonus lessons are intricate, in-depth, bar-by-bar reviews where I go through and break down every single 5-minute candle on a chart using everything you've learned over the technical system. One of those bonus videos is a video where I record myself live in a meta trade that I signaled and took on my own, so you can start to watch how I managed my emotions and my position in that trade. I then do that again with SPX in another bonus lesson, right? So all in all, there's like 13 bonus lessons that you're going to receive, probably 25 hours of content, right? Of extra stuff. Now, I know there's some of you out there who are the more advanced traders who are like, gosh, Jake, why didn't I get that right away? Because I don't want people going out of order. Everything I teach is a very specific order. So the reason I've gone from 1 to 2 to 3 to 4 to 5, and then you get the bonus drop after 5, is because after 5, you should be expected to have at least strong foundation of all of the stuff that we talk about in those bonus lessons, mainly the in-depth bar-by-bar reviews. So at the end of Thursday, tomorrow night, in 24 hours, you are going to get the most insane video drop of all time, where it is going to set you up for life. And in addition to that, in our last week of class, in our week 4 of our program, where we have no formal lessons scheduled, what we are going to do, and the date's going to be announced well in advance, so don't worry, we're going to do is do an extra bonus lesson for you all on a topic that is yet to be determined. What I do is I'm going to take the next week and a half to 2 weeks to see what I believe is the thing that this class could use the most. In our last class, it was a bar-by-bar review. The class before that, it was a live trade, right? I'm going to see what I think this class needs the most based off the questions that you ask over the next several days. And from there, I'm going to pick a topic for our bonus lesson that you and all other mastermind classes will have lifetime access to, of course, right? So when I say it's lifetime learning, I really mean it. And when I say we have this down to a science, I really mean it. And when I say that it's so much more than just the 8 lessons, I really mean it, right? This is going to be the biggest video drop. It's going to be an insane content drop. It's nuts, 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 nuts. So I love you all very, very, very much. Maybe one more time. Just let's do an LFG right now. Let's do an LFGs, the greatest LFGs of all time, just so we shut it down and nobody can ever compete. Come on, faster. I need you faster. I need you faster. We got the LFGs. This lesson was insane. The bonus video drop that comes after this lesson is going to be crazy thick. We learned the most accurate level system in the world. Honestly, after this, no one competes with the speed of our LFGs. I'm done doing them. I'm done doing them. I'm done doing it. Look at this. Nobody competes with this. Honestly, I love you all so, so very much. Any questions, do not hesitate to ask. Let's do the homework first and then try to come back to specific levels questions later on. All right. That being said, I love you all very, very much. I will get this recording posted to Kajabi ASAP. All right. I love you all. Gang, gang, baby.